Hello and welcome to another edition of our ETF Insights series, where we chat with innovative leaders from the ETF and digital assets ecosystem. Today I'm really delighted to be joined by Sebastian Kuelps, who is head of Germany and Austria for Vanguard. Sebastian is joining us for a special part series that we're doing in association with Vanguard, where we highlight various nuances in ETF distribution across Europe. And today we'll be doing a deep dive into Germany. So it's great to have you here, Sebastian. Thank you so much for joining us. And why don't we start with talking about obviously there's a lot of cultural differences across various markets here in Europe. And I'd love to hear how you would describe the German investor and how they use ETFs.
Well, first of all, glad to be here, Andrea, and thank you very much for giving us the opportunity to be on the show today. In terms of the German investment culture, it is a little bit different. In the end, the population actually doesn't have a very strong investment culture, I would always say. Only about 12% of individuals are actually invested in a mutual fund. And if you think about the German market as a whole, you have around 3 trillion of deposits and physical cash just lying around. So while Germans might be super good savers, as we're always made out to be, we're not necessarily very good at building wealth. And actually, we lead all league tables in terms of savings that we're investing as a percentage of our income, but we are lagging on all the tables in terms of wealth accumulation. So that kind of shows that there's still a lot of catch-up potential for the market per se. And I think it has to do with a couple things. First, pension solutions in Germany, especially in the second and the third pillar, so corporate pensions and private pensions, have really been based on guarantees. So there's very little visibility of how the capital markets can work for you in the long term to really build wealth, as it's just kind of hidden in these guaranteed type of products, as the investor never really gets the transparency of what's in those products. Now, if you're looking at the fund space, the institutional side, it's really been driven very strong by Spezialfonds or mandates. And that's been a really, really large part of the institutional part of the German market in the way that they invest. Now, in the mutual fund space, it's interesting to note that private investors are flocking much more to multi-asset funds. So they're extremely popular in Germany, multi-asset funds, based on fund to funds as well. And the interesting bit there, of course, is yes, they have changed a bit their investment style as well. They're adopting more passive products within those multi-asset or fund-to-fund products that are out there. So that's given the passive industry a bit of a pickup, and the adoption of passive has picked up in the mutual fund space. But it's also picked up quite a bit with the self-deciding retail investors, and execution-only platforms have matured quite a bit. And the ETF has really benefited from that. And private investors have started to discover the ETF, and it's becoming, slowly but surely becoming an investment vehicle of choice.
So in terms of ETF usage, what type of ETFs are resonating most with investors? And are you, in terms of the breakdown of usage, are you seeing more institutional use, or are you seeing more wealth management use on that side?
So I think the ETF per se, on the institutional and wealth management side, they're a little bit more indifferent as to what vehicle they're using when they're going into passive. So whether it's a passive fund or an ETF, they don't distinguish so much. They're looking for the fitting product for them. What are they looking for? They're looking for more granular building blocks. So, looking more at regional building blocks or more granular fixed income building blocks. And they're really looking to use passive where they're noticing, look, it's really hard for them to take on an active fund or to find active exposure, which can beat a passive exposure in the market. What's important for them? Important for them is really good tracking and, of course, attractive fees. And that's kind of how they've been adapting those. I think on the retail side, on the end investment side, it's a little bit different. In the sense that they're looking for really broadly diversified global exposures. They've been much more geared toward the ETF because they know that as the passive vehicle. It's easier for them to access in many cases. And in the end, they have looked at primarily equity exposure more so. And there's some of our big products like FTSE All World that covers around 4,000 stocks that it currently invests in, which is a super broad global equity exposure. Those are the type of products that resonate really well with the end investor as they're using those to invest for their long-term savings or their long-term investment plans.
So I think I'm actually very fascinated by the retail usage here in Europe, because it's obviously quite different than in the US for obvious reasons. But the other thing too is that there's been a lot of press around Germany and the growing retail use, and it's funny how one article picks it up and it's like everyone starts picking up oh, this is the market we really need to pay attention to, and either maybe replicate where we can in terms of tapping into that retail space, because obviously it's an untapped market in many regions. I know in Germany it's around ballpark figure 20% of overall ETF usage is retail. What was the initial driver, or what are the drivers of retail using the ETFs? Because I think it's a very important thing to talk about, and also very interesting. So I'd love to hear what your thoughts are.
Well, I think it starts really in the sense that most of the products that retail investors have invested into, as I mentioned before, have been guaranteed type of products when they're thinking about their corporate pension or anything that's tax incentivized by the government. And of course, any guaranteed products in a low interest rate environment it's very, very hard to get any return, and a real return almost impossible to speak of. So in the end, I think the retail investor has started to understand that he needs to do, or she needs to do, something for their retirement. And while many Germans not all that long ago relied on the state pension, saying, well, that would be plenty for me when I retire, they're now noticing that that's not the case anymore. So they're looking to invest into, well, to supplement their corporate pension and their state pension with something else. And it's been really interesting that the adoption of ETFs here has been big. And as I mentioned before, it's really come also with the maturity of the execution-only platforms in Germany. But if you think about it, I also think that in the end, being able to access your traditional active mutual fund in Germany, it's been sold through vertically integrated models where banks would push, in most cases, their own active models through a distribution model which was retrocession based. And a retrocession-based model, of course, one, you always need to question a little bit, are the incentives of the end investor aligned with those that are distributing the model? That's the first thing you need to think about. But also accessing these products is pretty expensive. You have relatively high upfront fees and then relatively high running fees. And I think investors have understood, and we Germans like to be quite cost conscious. We discount retail as something that we do well. They've understood, or are starting to understand, that costs play a super important part when you're looking to invest for the long term. And with that, and also with a bit of the help of the press as well, that's kind of been behind driving this ETF story, they've discovered the ETF as a product which can democratize investing. It's relatively easy to access. It's cost efficient. You're almost investing on an institutional type of price, and they can pick up broadly diversified products, and they're very transparent. So they've discovered this, and slowly but surely, you're getting a self-deciding execution-only investment model that's growing, and it's growing fast. I was looking at statistics recently. I think over the 5 last years, it's gone up more than 5-fold in terms of ETF investing AUMs for end investors, and savings plans have gone up. ETF savings plans have gone up from something like 500,000 to 3.5 million in Germany. So massive growth in that space. And as I mentioned, some of those core drivers being, cost efficiency, transparency, and really looking to get yourself set up for retirement.
Is there a lot of media coverage of ETFs in Germany that end investors would get have access? Do you think it's pretty thorough on the media side? It's just curious.
Yeah, I would always think there's always potential to do more, but over the last couple of years, the development that you've seen and the understanding of ETFs has picked up quite a bit. And I've got 4 kids, and one of my kids recently came home and goes, "Look, Dad, what one of my friends showed me what he has in his investment portfolio that he discusses with his dad, but it was a Vanguard ETF. In this case, it was the S&P 500. So funny. I'm just saying it's trickling down. And in the end, the coverage has picked up, but there's still so much more to do. The education around investing, we need to bring that much earlier into schools, get young people informed, and really to get them to understand about investing much, much earlier. And that is probably one of the core things that I would also ask the German government, or just in general for us to focus more on, is to get people to understand investing much earlier, because we need to now take it into our own hands. We can't rely on the state anymore when we retire completely. And so it's going to be more and more important that the investment acumen picks up and is, press does its job, schools do their job, we do our job to try to educate the population.
So Sebastian, my last question for you. So do you have, if you look at your crystal ball, do you have any views on, where you think ETF growth might be going? Do you see where maybe a particular area or segment of the market?
I think it's going to continue to just be pushed from the bottom up. So, we're probably not going to we're not going to have an RDR in Germany in the short term. So I don't think we're going to have a model that changes overnight in terms of the distribution that's out there. We're not going to get rid of some of the vertical integrated product and distribution models that we have in Germany. So in the end, I think the push needs to come and will come from the bottom up. The end investor will vote with their feet. They're going to go out there and they're going to ask their advisor, "Look, I've heard about ETFs. I want to take advantage of being able to invest cost efficiently. Tell me more about passive investing." And these are things that I think are going to continue to grow, and will put pressure on the model. And I think with that, we'll probably move a little bit the way the US has moved, in the sense that they didn't have a ban on retrocessions, but the market evolved in that direction, because the end client understood, in the end, it's in my best interest to work with a fee-based model, and passive products or ETFs or cost-efficient models are important there, and they can really be lived in that model. So I think that's something that's going to happen and will continue to happen and will drive the ETF growth. I'm hopeful for one other thing, and I'd end on that, is, of course, I urge the German government to think about how they can bring more investors into the capital markets. Right now, we are very limited in the amount of tax incentives that we get to save for retirement in the third pillar, so in the private pension space. Again, most of the solutions, or the solutions that are actually incentivized by the state, are guaranteed products. I think that needs to go away. I think we need to be, the government needs to up incentives and enable investors to save in the capital markets directly. And I'm hopeful that will bring more Germans into ETFs, but just also into the space of building an investment portfolio for the retirement.
Yeah, that totally makes sense. Thank you so much, Sebastian. It was really super interesting. And for those of you who are watching, if you'd like to watch this again, you can go to blackwatersearch.com. And Sebastian, thank you again for your time. I really appreciate it.
Thanks for having me. Bye.